Sorry about that. If we can then go straight to the confirmation of the agenda itself. Members, by show of hands, if you can confirm the agenda with the withdrawal of item number 11 and 11 and 12, 12 and 13 will follow after item number 8. Thank you, Mr. Pukula. Thank you, Ms. Mbongose, Mr. Gumede, Advocate Stole, as well as Mr. Mkhize. I also confirm. Thank you very much, members. We move on to the deliberation of the substantive items on the agenda, starting off with item number 5, which is the Sasol Gas's application for approval of maximum gas prices for the period starting 1st July 2023 until 30 June. To do the highlights. Mr. Pukula, is it a legacy hand?
Apologies, Chair, it is.
All right, thank you very much. All right, can you please introduce the item number 5?
Thank you, Chairperson. I'll introducing the item. I will also be assisted by my colleagues who are on the call. Chairperson, this is the application from Sasol Gas for the maximum price of gas for the period of 1 July 2023 to 30 June 2024. Sasol is requesting NERSA to approve quarterly adjustment of the maximum price in this period. You will see that on table 5 of the discussion document, there is a summary of the maximum base price to be adjusted on a quarterly basis. And as per the application, the maximum price that Sasol Gas is applying for the period of 1 April 2023 to 30 June 2023 is 82.88 Rand per gigajoule. And this maximum price is to be adjusted on a quarterly basis. Table 6 provides the maximum price for July 2023 to September 2023, which is based on the adjustment factors, and it's now sitting at 78.23 Rand. The reason, you will also note, Chairperson, that Sasol Gas in its application, they call this a national maximum price. Reason for calling it a national maximum price is because this maximum base price is then subjected to the adjustment factors. Sasol Gas maximum price is adjusted in line with its contract with its 3 suppliers. At this stage, and as per the application, Sasol Gas is supplied by 3 suppliers. That is the natural gas from Mozambique, the methane-rich in Secunda, and also the synthetic gas. Each of the gas suppliers contract with an adjustment formula. And in their application, Sasol Gas then applied for a weighted average cost of gas acquisition. Now, in terms of the trading cost application, the trading cost is applied for as based on the methodology that is approved by NERSA. And Chair, we also want to highlight the fact that Sasol Gas is saying in the application it does not agree with the cost plus methodology because it believes that this methodology is not suitable for the South African context. The applicant submits that the price yielded by the cost plus methodology will not enable it to invest in increasing the life of generating assets in Mozambique and will wind down to investment in the gas industries. They spent extensive time in the application writing up this view and stating that there is a risk and reward imbalance due to the application of the cost plus methodology. According to Sasol Gas, its preferred methodology is that of linking the South African price to gas indices traded in global hubs, such as Henry Hub and TTF. Chair, in their application, they are also applying for what they call alternative value compensation. And this is, according to Sasol Gas, compensation for Sasol Gas margin erosion due to selling to gas to external customers. Table 8 of the discussion document provides a summary of this. And in terms of that summary, this alternative value compensation amounts to 113.57 Rand per gigajoule. NERSA's assessment of the application is provided also in the discussion document. So we started by indicating NERSA's role in the determination of the maximum price. We believe that the NERSA's role is to mitigate for a lack of competition in the pipe gas market. We do this by imitating maximum price that would persist in competitive markets and also facilitating conditions for effective competition. It is for this reason, Chair, that we believe that the cost plus methodology is therefore suitable for the South African context. Now, in terms of the competitive benchmark, it has been proven not to be practical at this stage in South Africa, as illustrated by the recent surge in the international gas prices. And also, our research indicates that jurisdictions where gas prices are linked to global hubs are now moving to cost plus or the traditional oil-linked prices. And also, our research also revealed that global hubs has not translated into increased investment. I think Mr. Mutsau from RAR can give further details on this one. And therefore, we believe that the cost plus methodology is more practical and relevant approach until such time as customers will have access to or are able to import gas from international markets. Now, I will ask Ms. Du Plessis to come in to provide a summary in terms of the assessment of value dilution, but I just want to also summarize the assessment on the calculation of maximum price before Ms. Du Plessis and Mr. Godora comes in. Now, in terms of the assessment of the calculation of the maximum price, there is a table on table 10 which provides an assessment of the cost of gas acquisition. We believe that that calculation from Sasol Gas, it does comply with the methodology. And also, we have also preliminarily accepted the adjustment factors, as we have also have a site on the contracts or extract of contracts, which shows that indeed those adjustment factors are aligned with the contract they have with the suppliers. You will also note that Sasol Gas has also increased experience and increased in its cost, and that is provided also in the submission. And they have increase in the cost increases from FY21 to FY 2024 of around 36%. In terms of the trading cost analysis, we have differences with Sasol Gas of above 10%, and those differences is due to the unaccounted for gas. NERSA used the benchmark of 1%, as precedence is also provided with the ROMCO assessment of the unaccounted gas. In that volume balance analysis, NERSA has always used a benchmark of 1% as an acceptable benchmark for unaccounted gas, and that principle was then used in this application, and therefore that made a variance between NERSA and Sasol Gas of 21% on the trading cost calculation. With regard to the profit element, Sasol has followed our methodology. However, they have asked that one of the companies be replaced with their preferred companies. And when we check the criteria that NERSA has prescribed to be used in replacing one of the companies, we realize that Sasol Gas did comply with the criteria, and therefore it is acceptable. The profit component calculation is at this stage with the Sasol Gas application is around 32%, which we believe that it is acceptable. Chair, I will ask Ms. Du Plessis to come in with the assessment of the value dilution. She will also be assisted by Mr. Godora.
Right, if you can be very quick on those, I'm giving you guys 3 minutes in total.
Thank you, Chair. Chair, then just very briefly, with regards to Sasol Gas's alternative value compensation submissions. Chairperson, we had a look at the information submitted, and the information submitted is not sufficient for us to make a firm conclusion on that part of the application. Chairperson, we in the submission we have outlined the criteria in terms of which we can assess the alternative value dilution component of the submission. First of all, Chairperson, we note that NERSA's role is, amongst others, to approve maximum prices that mimic prices in competitive markets, or what the prices would be in a competitive South African market. Chairperson, therefore, we would need to, the markets that SASOL wishes to benchmark its margins against, or where it says it can derive alternative value, would have to be competitive. Otherwise, we would perpetuate anti-competitive outcomes from those markets into the South African gas market, and that would defeat the purpose of our role. Therefore, we would need information regarding the specific products where they can derive that alternative value from, and we would also need information regarding the structure of the and competitive conditions in those markets as well. Chairperson, we would also need further information to enable us to properly interrogate the methodology used by SASOL Gas in calculating that alternative value that it says that it can derive from the sale of those other products, which is not in its application at the moment. And Chairperson, yes, I think that is just a very high-level summary of the types of information that we would need from SASOL Gas. Another note is just also that it is not clear to us that comparing the margins that SASOL Gas can achieve on the sale of an input product such as gas with the margins that it can achieve on a value-added end-user product that it supplies to the end user, it does not appear to us to be a fair comparison, and SASOL would need to also give us information to justify that comparison is a like-for-like comparison. Chairperson, we've provided a lot more detail regarding the criteria and also the specific information that would be required from SASOL Gas to enable us to meaningfully engage with that part of their submission, but currently that information has not been provided to us. Thank you.
All right. Thank you very much. Mr. Kotora, you'll come back after the members have had an opportunity to engage with the submission. The introduction took longer than expected. Members, I would like to invite you to comment on the submission, and the submission here is just a discussion document which needs to be published for stakeholder comments. I would like to invite your comments, members, by show of hands. Any questions, members? Mr. Gumede, followed by Advocate Sithole. Mr. Gumede, you may start.
Good. Thanks. Thank you, Chairperson. Good morning to you and to members and colleagues. I just wanted to ask a question in respect of the cost plus approach, that to the extent to which we are regulating an industry or regulating SASOL. And I guess in the liquid fuel sector, where the cost plus methodology is used, it is an industry application. When we look at import parity, for instance, it's not for a specific company, but it's for an industry. Is this not something that perhaps that as we proceed with this methodology, if we are proceeding with it, looking at a cost plus approach, that we move away from perhaps regulating SASOL's prices, but rather to regulate prices of product that could be coming into the country, irrespective of the source, whether it comes from it comes via LNG or it comes via pipeline, or it's even manufactured locally. I guess I'm raising this because I guess even in the liquid fuels, we have all three components. We have synfuels, local, based on local gas and on local coal, and also crude oil, refined product, which is manufactured in the country, and also finished product. But the idea is to balance all three to come up with something that is broadly representative of all three, but is supportive of growth. So I'm just asking that is in terms of our approach when we're looking at this cost plus, are we in fact actually basing it on doing a cost plus for Sasol or doing a cost plus approach for the industry? And then one last question, Chair, and I was going to ask it in the next, because in the next submission, it's more pronounced. But just maybe, I know I've asked this question before, but I've perhaps not been, I've not been able to sit in workshops where this was discussed. No fault of the team, just because perhaps I was just not there. Can I just be reminded again, when we're looking at a rate of return methodology, I'd always thought that the rate of return methodology, the WACC itself is in fact the profit component. I don't know, in the discussions that may have ensued in my absence, how was that considered? Because I still see those three components. It seems to me that it's mixing two things where we've got a rate of return and then we still introduce a profit on top of that as a percentage based on that, whatever approach. It seems to me that we are double accounting, and it's just a perception from me. But can I be maybe just indulged upon and just indicated why what I'm saying is incorrect? Thanks, Chair.
Thank you, Mr. Gume. The Advocate Stole.
Thank you, Chairperson. Good morning, members and everyone on this particular platform. Chair, mine is just a question of clarity, and it relates to Sasol's request that there be quarterly calculations of the gas prices for the year that they are applying for. And reading the submission, Chair, it would seem there would be fluctuations on a quarterly basis, and especially when one looks at the table 1 and 2. And my question is, how are we intending to address these fluctuations? Because they may have a positive or a negative impact on the licensee and the consumer. And in the submission, we briefly mentioned the possibility of using a clawback. However, I was wondering whether is there no other alternative method that we can use to address these fluctuations. And if we do not have, I thought maybe it could be one of the questions that we add in the discussion documents, because I did not pick it up, Chairperson. Thank you, Chair.
Thank you, Advocate Stole. Ms. Makota, can you please respond to the questions and indicate where you need some assistance from your team?
Thank you, Chairperson. I will start with the CEO's question, and then I will also ask the team to come in with the second question from Mr. Gumet. Chair, in terms of the alternative method to address the fluctuations of the maximum price on the quarterly basis, we have considered that, but wherever our constraint was with the fact that this maximum prices is aligned with the contract that the applicant has with the suppliers. You will note, Chairperson, that in terms of the methodology that we have, we are required to make sure that they recover all the actual costs that they incur, meaning that the cost of acquisition that they incurred from the supplier, they need to be reimbursed for that. And therefore, because the supplier's contract is adjusting on the quarterly basis, we were then constrained in that we had to also adjust the maximum price in line with that contract. However, the alternative that we thought we could consider was having some sort of a forecasted maximum price that we can have up until June 2024. But the challenge with that is that the contract is adjusting based on the historical price. And therefore, if we use the forecasted price, we may be moving away from the cost of acquisition of gas. But it is something that we can put as an alternative. Perhaps we can say as part of the question, ask the stakeholders whether we can use the forecasted price or not. Now, relating to responding to the first question from Mr. Gumede regarding the cost plus methodology, making sure that we broadly represent the other stakeholders and ensuring that our methodologies provides for growth in the industry. Chair, in terms of the research that we have undertaken, as we have said in the introduction, our research indicated that the cost plus methodology at this stage is the most practical way of determining the maximum price, given the fact that we don't have imports from other countries. Perhaps this is the most practical way. And also our research also indicates that when you look at other jurisdictions, they are also moving to the cost plus methodology or the oil linkages. But on this particular one, I also want to ask RAR if they can just provide the details or the summary of the research that was undertaken in this regard. I will also ask colleagues to come in relating to the rate of return and whether there is no double counting. Thank you, Chair.
Thank you. I'm not sure if if I can, there's a hand that is up. Is it Mr. Mkize? Just want to check. Mr. Mkize, do you want to come in now? And then the team will add your question and respond to that question.
Thanks, ma'am. And thanks to the presenters and their responses. I'm just appealing to the presenters to say, look maybe at the petroleum or fuels pricing regime, and as way of benchmarking, even on the electricity side, to look and consider that, because if you look effectively the petroleum fuel side, you review every month, so to say, because of the formula that is in place. I'm saying that you could have a contract that is formula based, in other words, and therefore those changes can be effected more frequently to avoid these huge jumps at the end of the day and problem of under recoveries and over recoveries over a longer period. I'm saying that, I'm not saying move to that regime, but I'm saying benchmark against it and provide good reasons why you're not adopting it as such, because there are clear advantages. And then when in the same vein also, when you're looking at cost plus, you kind of benchmark and there are certain aspects that are deemed because you want to have efficiencies, because it doesn't help to add on a cost that has been incurred, but not in an efficient manner. I'll leave it at that. Thank you.
Thank you, Mr. Mkiza, for your input. Mr. Kometa, is it a follow-up?
Yes, Chairperson, it is. I just want to
Yes.
clarify, because I don't think that maybe my question wasn't clear, my first question. My first question is not to question cost plus. My first question is to say, in giving effect to cost plus, are we regulating a company or are we regulating an industry? And in that industry, do we recognize the fact that the sources of gas could well be multiple and not just come from manufactured gas or actually piped gas from Mozambique, which might also come to an end? Is that, are we setting up, as we set up this cost plus regime, are we forward looking? Are we looking at actually regulating an industry rather than regulating gas? That is my question. I'm not questioning cost plus. Thanks.
Thank you, Mr. Gumede. I think they'll come back to that. If you can come back to that, Louise, with regards to the market conditions that are conducive to this kind of methodology, and when can it be changed and all of that. But can you please respond first to the questions raised by Mr. Gumede? Some of them were not responded to, the one about work and the profit component that is included on it. Mr. Kotora?
Thank you, Chair. Chair, maybe I would start with the question on the work to say, is the work a profit component on the rate of return? Chair, yes, this is correct. The work is the profit component. In this instance, why there seems to be an additional profit component? Our trading companies ideally don't have assets. They don't have pipelines. They don't have significant assets. Some of them even don't have offices. So the trading component will not have any significant assets at all. When we were reviewing the methodology, we started by first assessing how our market looks like and the nature of the companies that we're regulating. And we saw that they do not have network assets per se. The network are regulated separately. You recall, Chair, the transmission or the storage side of regulation, we only give a work to the regulatory asset base as the profit component. Now, in this instance, our research led us to how do you give a profit component to a company that does not have assets, such that we ended up borrowing from the excessive pricing cases, particularly the Aspen Pharmaceuticals case, where they did not have assets, and the competition authorities in that regard benchmarked the amount of profit that ought to be given to Aspen using companies that are similar to it. So we borrowed from that particular instance and said, let's look at companies that are trading in competitive markets, and we give a profit component that is in percentage terms the same as that which would is coming with a sufficient rivalry. This was in recognition, Chair, that we do not, most of our companies do not have assets. As you recall, in maximum pricing, we have two components. We have a price, which is the gas molecule, and how to give the reward to a gas molecule where we don't have sight of the upstream assets. It became a problem for us. So that's why we want the committee to bring these differences to the committee, to say we don't have sight of upstream assets, which would allow us to give maybe a work on the molecule. We simply have a purchase price. And on that purchase price of that molecule, how do we give a profit component? And in the case where there's an absence of assets, we then benchmarked with the margin from competitive markets. I will leave it for now, Chair. And on the first question, Chair, to say, why don't we have one gas price? Why is it that in gas, we seem to be using the Sasol gas's costs and not having, let's say, a benchmark as in petroleum, where it has one benchmark cost, which is that imported fuel or the basic, is it the basic fuel price? And from the basic fuel price, you then add on other costs. But essential is the use of a benchmark to start with that import basic fuel price. And I think our first methodology had a benchmark as a first stage, but the use of a benchmark was criticized by the courts when we were taken on review. And the Constitutional Court provided guidance and said, when you're dealing with a monopoly, you have to know the monopoly's costs. So this sort of tied our hands in that we have to know Sasolgas's cost, or to start with Sasolgas's costs and build. I think in the event that we start importing or fuel imports start coming in, like LNG imports start coming in, at that stage, we have also included a cost plus, but it will start with the imported or the imported price and build on the cost. I think, Chair, this is mainly because of the guidance we got from the Constitutional Court, that we have to at least find a way of starting with Sasolgas's cost and point to what the maximum would be in this industry. I think, Chair, I have addressed some of the two questions that were indicated, but just to also highlight that we are sort of following on the petroleum kind of methodology when we are requesting these adjustments. The Sasolgas's upstream costs are adjusting every quarter. If they were adjusting on a monthly basis, we may have actually requested for a monthly adjustment, but the costs, the costs which they buy the gas adjust quarterly. So to avoid a scenario where if you wait too long, the differences may pile up, they have requested that as these changes are occurring, every quarter their price also changes. And to that effect, they have submitted extracts of their contracts with their upstream suppliers, as well as a spreadsheet. So we can also try to mimic or to recalculate the same calculations they'll be doing, and we'll be providing a check, an independent check as to whether those calculations are being done in line with these upstream contracts, Chair. Thank you very much, Chair.
All right, thank you very much. I think most of the questions are answered, but I think you need to still include a question for stakeholders regarding the frequency of price adjustment as proposed by Advocate Sithole and supported by Mr. Mkhize. And then I think you also responded to the two questions asked by Mr. Kumede, but Mr. Kumede may have another follow-up. Mr. Kumede?
Oh, apologies. I didn't mean to raise my hand, but I do, Chair. Can I request that you pose the proper questions here as well on this one that says, you see, for a molecule of gas in our road should cost the same irrespective of where it comes from. Because if it doesn't, it creates what is called arbitrage. Number one. Number two is that if a molecule of gas, if imported, would cost twice the price of if imported as LNG would cost twice the price as that which is on the pipeline, and therefore people would not be willing to pay that price which is twice that coming from the pipeline. It means you would not get LNG. In fact, the only time that you'll probably get LNG is when that gas from Mozambique is then exhausted. But that would be too late to actually start to effect infrastructure investments. All I'm simply asking is that like it is done in liquid fuels, because Mkhize, for instance, Mkhize has raised this, the liquid fuel system recognizes it's got exactly the same challenges that we have in gas. It's got gas that is manufactured in the country using crude oil, gas that is liquid fuel that is manufactured in the country using crude oil, some that is manufactured using coal, some that is imported as finished product. But the value of that liquid fuel is the same irrespective of the source. Unless we come up with a system that recognizes that in gas, it is always going to be a challenge, and we're not going to get investments in LNG. So that is the first point. I'm just asking, we can pose a question to the stakeholders who can then give us alternatives in terms of how we can possibly do this. Secondly, on the issue of work, mine is to say, if recognizing the problem that with trading, perhaps there are no assets and you want to actually put some kind of EBITDA, then remove the work so that you don't actually double. You can't on one end give a profit in terms of work as well as give a profit and actually give a profit margin on top of that. That can only be double accounting. Again, you can pose the question to the stakeholders if maybe what I'm saying is deemed to be incorrect. Thanks, Chair.
Thank you, Mr. Kumet. I think the last point, the question can be posed there, and also if members can just recognize the nature of the industry and the dynamics of the industry, because this is also the trading business in gas. It may be slightly different when compared to other industries, because the law is very clear. It talks about the charge just for the molecule alone, and it separates any charge that is meant for infrastructure or some facilities. That charge will be for the tariff. So you have that kind of a framework in gas. Now the question is, if somebody on the trading business, you only have your trading business and you're just operating, you don't have any assets that facilitate that trading, then how do you then get to a maximum? Because the law says the maximum, and that should be the charge of gas. And that maximum does not necessarily include some assets. So there is that component, and maybe we may need to, when we discuss some challenges on the methodology, members are invited to also just assist in that regard. So that's number one. The second thing is that other traders, they also own not network assets, meaning distribution and transmission pipelines. They own, these MET modules, others, the ISO tankers, and all of those kind of things. Now, how do you, because those are not necessarily assets that you will lump or classify as storage tanks, because the aim is just to dispatch that gas. So you may not classify them as storage, because the Gas Act talks about the storage, infrastructure, distribution, and transmission. Then how do you deal with those assets that they utilize for purposes of taking the gas to the customer? Where do we fit them in? And where do we allow them to recover? Now, the part on the gas molecule, in terms of the methodology, if you go to Regulation 4 Sub 4, and the Constitutional Court took time to explain, it says the task of regulating the gas price, when it started to address that particular aspect alone, and then try to unpack that Regulation 4.4, which is the one that says that the licensee must be allowed to recover all of its operating efficient operating cost and the total investments made. But then not all of them then will have some of those assets, and there will also be the acquisition cost and all of that. So it's the issue of how we can give effect to that Regulation 4.4. We know that even before I joined NERSA, I was told that maybe it was not meant to be included in the gas molecule aspect. Maybe it is more suitable on the tariff side, but those are things that the department is considering in terms of making some changes in the regulations and the Gas Act. So there are those challenges, and we are trying to give effect to the legislative mandate and the framework that is there, and try to be much more practical. But members, your comments are appreciated. Maybe we can just find at a different session, try to find each other how we can assist in coming up with a methodology that might not result in any, a possible or a perceived duplication on the calculation. Can you then, on the issue, the last point, the issue by Mr. Gumede, Louise, do you want to clarify the issue of the methodology itself at this point in time?
Thank you, Chairperson. Yes, maybe just to take a step back and understand why the methodology is there in the first place, and that is the economic power problem that we're sitting with at the moment, and that is that there is insufficient competition in the market. We have one player who is a monopoly or a near monopoly, has a monopoly or near monopoly position throughout the supply chain, and they have significant market power. By extension, the other players in the market, because they operate in this market with inadequate competition, there is also a need to put in place a maximum price for them as well. The main reason why there is also this insufficient competition is the lack of gas supplies and alternative sources of gas supply in the industry. That has been identified as a main barrier to entry and expansion in the market. Chairperson, as NERSA, we review the degree of competition in the market on a regular basis, and once competition is sufficient, then there will not be a need for NERSA to put in a maximum price anymore, because the market would then be, the price would then be determined by supply and demand conditions. Some of the main things that would have to happen before there is sufficient competition in the market is additional sources of supply and alternative sources of supply that would then enable competition to develop. So we are monitoring the developments in the market on a regular basis, and once those factors, we see those factors developing, we will then revisit the methodology and possibly, when there is sufficient competition, remove the methodology altogether, because then there's not an economic problem anymore to address. So it's a temporary measure until competition develops. Thank you, Chair.
Thank you very much. Members, I think there are two questions that members requested that they be included. One on the price adjustment, the frequency of the price adjustments, to take care of the challenges that were highlighted by Advocate Sithole, and also just the issue of efficiencies that were indicated by Mr. Mkhize. If the team, you could make sure that you come up with a question to stakeholders in that regard. The second question was from Mr. Gumede, requesting that you include a question pertaining to the calculation of the work as well as the profit component, so that one can then get the views of stakeholders on with regards to any possible duplication, but also to ask about a reasonable and competitive profits with regards to traders that do not own assets, of which assets will then be eligible to be earning a return. So if you can try to come up with a question around that. Mr. Gumede, I think the other question, the bigger question with regards to whether we are trying to find the value for gas. I think maybe we had started there in 2014, and maybe we can, depending on the nature of the market now, whether the market has actually developed in terms of the sources of gas, but with that nature, with regards to us trying to find value for gas, that was the first ever methodology that we came up with, the value for gas. After the market value pricing that we had for 10 years at NERSA, we then said, let's look at the netback pricing approach. And the Constitutional Court criticized that you have a monopoly currently. Now, when you are a regulator, you are regulating to make sure that this monopoly is not going to exercise market power by charging high prices. So the Constitutional Court says, whilst benchmarking is an appropriate mechanism, it is important when you are facing a monopoly that you know their marginal cost, and so that you can be in a position to compare the cost-price gap or the cost-price margin so that that margin is not excessive. And to the extent that that margin yields a surplus, that surplus must be distributed equitably between the supplier as well as its customers. So that is those are the words of the guidance that we got from the Constitutional Court. So it is because of the existing market structure that we have. Unfortunately, it's a market structure that is dominated by Sasol at this point in time. So it's very important that they also do not enjoy windfall profits to the extent that there's no other supplier that can easily come into the market, because if you want LNG, it means there must be import infrastructure that is built in the country, and that will also require significant capital. So one needs to also look into that aspect. But yes, the issue of the value of gas it is something that we started with. But to cater for the LNG, already the methodology has two other methods. One is the oil indexation that is included in this methodology for importation of LNG. And the other is the JKM, the Japan Korea market, that the LNG suppliers around the world also prefer. So they will have an option there and the flexibility of choosing between those two at the moment. But if you are faced with this current situation, the role of the regulator, how do you deal with the current situation? Also recognizing that price regulation is not indefinite. Once the situation changes, then maybe you will also be flexible in the way that you regulate the price of gas. Members, I would like to take you to the recommendations with those two additions, and also perhaps the close monitoring of the methodology to in terms of its challenges and what will be the outcome, as pointed out by the members worried about the investments and the growth. Is something that the team will also take into account and brief the subcommittee on twice a year. All right, members, in terms of the recommendations on page, there are no page numbers, but on paragraph 14, the subcommittee is requested to note the discussion document on Sasol Gas's maximum price application as attached on Annexure A. And then the second decision that is requested is that the subcommittee approves the publication of the discussion document for public comment with confidential information withheld as shown in the discussion document. And this discussion document, members, will be amended to accommodate the two questions that the members have requested that they be posed to stakeholders. By show of hands, members, if you approve and note. Thank you, Mr. Gumede. Thank you, Ms. Mpungose. Thank you, Mr. Mkize. Thank you, Mr. Bokula. I also support. Thank you, Advocate Sitole. Thank you very much, members. We've taken time on this one. There's a similar one. I'm hoping that those ones, they will move quicker. All right, members, the second submission for consideration is the preliminary assessment of Novo Energy's application for a maximum price for the period May 2023 until April 2024. Please take the matter as read and introduce the submission and the highlights.
Thank you, Chair. Good morning, members and colleagues. This application is for Novo's application for Novo's maximum gas price for the period 1 May to 2023 to 30 April 2024. The Novo applied on the 5th of June 2023 for a maximum gas price. In terms of the cost of gas, Novo purchases gas from Sasol Gas at Evraz, and it determines its cost of gas based on a weighted average calculation. NESA has requested additional information in terms of the gas supply agreements to verify these costs. On page 2, on table 2 is a overview of this application, and in terms of the trading costs, the differences which we can highlight is in terms of the calculation of the WACC. Novo decided to select companies that reflect its similar risk profile as Novo in terms of their beta calculations. So in terms of the consultation process, we will then verify the information provided by Novo with what NESA will verify in terms of the information on the Bloomberg terminal of these companies. The profit component, there's a difference there in terms of the calculation of how the EBITDA margin is determined. We will also verify that information as soon as the applicant does submit the companies that is also used in terms of its EBITDA margin benchmark. The recommendations, Chair, are on page 11. Thank you.
Can you also just, with regards to the clarification provided, because we've got two here, we've got trading cost, indicating, I'm sure that the assets that are owned by this particular trader, and then there's a cost of gas.
Oh, okay, yes, Chair. So the applicant applied in terms of the cost plus methodology. The cost of gas is simply the molecule purchased from its suppliers, and the trading costs are assets that Novo deems as those that are used in the trading business. So it's simply your vehicles that it uses, office equipment, and conversion kits, because Novo does do some conversions of taxis from gas to CNG sort of vehicles. So those trading costs the trading cost is the REP that I've just mentioned. And in terms of our REP, we've concurred currently with the REP that was submitted on condition that additional information is provided by the licensee. Thank you, Chair.
Thank you very much. Members, the submission is before you for comments, for guidance, if any guidance, members. It is also the preliminary assessment of the maximum price. It is here for noting and to request the committee to publish it for comment. Mr. Mkhize, is that a lingering hand? It's been up.
Sorry, it's a lingering one. Apologies.
Okay. All right. Okay, members, if there are no comments, may I then take you to the recommendation? The recommendations on paragraph, can you assist me? Paragraph 14. The subcommittee is requested to note the discussion document on Novo's application for the maximum gas price for the period 1st May 2023 until 30 April 2024, and that discussion document is attached to this submission. The second decision requested from the subcommittee is that the committee approves the publication of the Novo's discussion document for public comment with confidential information withheld as shown in Annexure A. By show of hands, members, if you are approving the discussion document and publication. Thank you, Mr. Bukula. Thank you, Mr. Mkhize, Advocate Stole, Ms. Mpungose, Mr. Gumede, and I also support. Thank you very much, members. We then move on to the next submission, which is also the preliminary assessment of natural gas vehicle PTY Ltd VGN application for maximum gas price. If you can also introduce this one. I'm giving you 2 minutes, please, and do the highlights and also indicate where this trader owns assets that it uses to transport the gas.
Chairperson, I will introduce the submission. This is the submission from the natural gas vehicle. They are supplied gas by their sister company, who is VGN. Chair, in their application, they are applying for the cost of gas and also the trading margin, plus the profit component, which gives a maximum price of 419 Rand 63. And with the assessment that we have with Novo, we have a difference of around 3.2%. The reasons for the difference is due to the fact that there were some errors with the way that the profit component was calculated by NGV. Chairperson, in terms of where exactly the natural gas vehicle is located, they have a license to trade in Gauteng. I will just need to ask colleagues to reflect on the specific areas where these vehicles are located. We are asking that the committee approves that the discussion document be published for public consultation process, and we are also asking that the committee note the discussion document. Thank you, Chair.
Thank you. Ms. Makota, please clarify, without mentioning the numbers, Table 1 and Table 2. My understanding is that the committee's attention is drawn to Table 2 because the cost of gas may have been overstated by this licensee. And when you calculated the average gas price, it gave you that amount on 5.4. And there is Table 2 calculating once you verified the average gas price.
Yes, Chairperson, we would like to draw the attention of the committee to the Table 2, and that is the correct information as per the updated information from the applicant. Chair, also what we want to highlight is the fact that with the CNG companies, the profit element and the maximum price is a bit high because of the volumes that are very low. Thank you, Chair.
All right, thank you very much. Members, any questions, guidance? By show of hands, members. If members are happy, then I'm going to take you to paragraph 13 of this submission. The subcommittee is requested to note the discussion document of NGV's application for maximum gas price for the period starting 1st May 2023 until 30 April 2024. And that discussion document is attached as Annexure A. And the second decision is that the subcommittee is requested to approve the publication of the NGV's discussion document for public comment with confidential information withheld as shown in Annexure A. By show of hands, members, if you are approving and noting. Thank you, Mr. Mkise. Thank you, Advocate Stolle. Thank you, Mr. Kumede. Thank you, Ms. Mpongose. Thank you, Mr. Bukula. I also support the recommendations. Thank you, members. I'm going to item number 8, the preliminary assessment of virtual gas network, VGN's application for maximum gas price in terms of the Gas Act. It's a sister company of the one that we have just approved. Please introduce it, Ms. Makoda, and please indicate where there is correction of information that may have been overstated.
Chairperson, may I ask Mr. Keswa to introduce the submission?
Thanks, Chairperson. This is the preliminary assessment for maximum price application by virtual gas network for the period 1 May 2023 to 30 April 2024.
The volume, Mr. Keswa. Your voice, please.
My apologies, Chair. I hope I'm audible now. Chairperson,
yes, you are. Just project your voice properly.
This is the maximum price application by virtual gas network for the period 1 May 2023 to 30 April 2024. Chairperson, VGN is applying for a maximum price of 299 Rand, 66 cents per gigajoule, and they used the methodology to approve maximum prices. The difference between NERSA and VGN's calculations are mainly because of the trading cost component of the maximum price. Chair, in the trading cost calculation, the differences are because of NERSA's recalculation of REB, working capital, the work, and taxation. Now, in terms of REB, Chairperson, NERSA excluded an item that VGN terms as working in progress. This relates to a project that VGN previously said was halted. NESA is of the view that the asset of this project should be added once the assets are in commission. Previously, Chairperson VGN has stated that it will alert or let NESA know once the project is in commission. So NESA will then include the assets only once that information is provided by VGN. And NESA has requested, as part of the information for REB, a full asset register and audited financial statements for the past 3 years to verify all the other items in the assets that form part of REB. In terms of working capital calculations, VGN made adjustments that are not stipulated in the tariff guidelines, and NESA defaulted to using the tariff guidelines and calculating the working capital. In terms of the work, NESA used the latest available information, whereas VGN used information that is outdated for most of the components of work. And the last aspect, Chairperson, is the taxation. NESA followed the flow-through method as stipulated in the tariff guidelines, whereas VGN used a taxable income method where it estimated profits and then deducted the tax rate. Chairperson, the cost of gas issues that were mentioned in the NGV presentation are the same in table 1 and 2, where the cost of gas was overstated in the initial application. Then VGN resubmitted the application with NESA's guidance in what the cost of gas should constitute. Chairperson, the overall percentage difference between NESA's maximum price calculations and VGN's is 1%. We therefore recommend the PGS to note the discussion document of VGN's application for maximum price for the period 1 May 2023 to 30 April 2024, and to approve the publication of the discussion document on the NESA website. Thanks, Chairperson.
Thank you very much. Members, the submission is before you for comments and for guidance. If there are any comments, members, or proposed changes. Mr. Mkhize.
Thanks, Chair, and thanks to the presenter, Mr. Keso. I'd just like to get clarity here. When it comes to the regulatory asset base, even when it comes to the expenses, we're talking about verification of the asset base. I would like to know if there are any prudence assessments that you have done, and to get clarity in terms of the application of our prudence guidelines in terms of verifying some of the costs that are incurred, looking at how much, for example, the RAP will then contribute to the quantum of the tariff. That's just my only question. Thank you.
Thank you, Mr. Mkhize. They should have touched on that based on the discussion held with the team. Ms. Makota, may you please clarify on this? These are the questions that you should have touched on.
Chairperson, there is an addendum that we had prepared which talks to the efficiency test and the prudency assessment based on the guidelines for the prudency assessment. I just want to ask Mr. Kwesa just to summarize that assessment.
Thanks, Chairperson. Yes, that's correct. Ma'am, we do have a prudency assessment report.
Just hold on, Mr. Keswa, please, can you shift your position there because we cannot hear you. Mr. Bukula?
Thanks, Chair. Maybe let me listen to Mr. Keswa's response, because I was going to point to a part in the submission that addresses Mr. Mkhize. But yes. I'll listen to Mr. Keswa first.
Thank you, Mr. Bukula. Mr. Keswa?
Thanks, Chairperson. Yes, we have prepared a report that speaks to the prudency assessment for the 3 applications, Novo, VGN, and NGV. and they speak to the assets that the licensees are applying for, and also the efficiencies in how those assets are used and whether they are usable or are still useful.
Sorry, Chairperson, may Mr. Keswa maybe take off the headphones and speak directly, because I've switched on to full volume and I'm struggling to hear him.
My apologies, Chairperson. I don't have headphones on. Maybe my laptop has an audio issue. I'll try to project even more, Chairperson. We do have a prudency.
Yeah, that's a voice. That's a voice, not a soft nyana voice. That's a voice. Bring your voice out, Mr. Keso.
Yes, Chairperson. Just to be quick, Chairperson, we have prepared a report that speaks to the assessment of prudency for both CapEx and OpEx. And on top of that, Chairperson, we have modeled a cost-benefit analysis or model that will look at the efficiencies in a more thorough way. However, at this stage, Chairperson, we are limited by the information that we have. We have requested information for us to do thorough prudency assessment on all the licenses or the applications that we have at this stage, Chairperson. Thanks.
All right, but where in the submission are you talking about this, so that you can point members to that? And also, if there's questions that needs to be asked from stakeholders regarding this, you can also point us to that, because this is information that you considered prior to the submission coming here.
Yes, Chairperson. It's an addendum that was supposed to be an attachment to the application, the reports that are in front of the PGS today. But in terms of the sections in the submission, it's under the first rep paragraph. I don't have the submission in front of me at the moment, but the addendums are going to be attached to the discussion documents that will go to the public, Chairperson.
Mr. Pugula, do you want to come in at this point?
Chairperson, I'm fine. Let me pass for now, Chairperson.
Thank you very much. Ms. Makota, do you want to touch on the issue of this efficiency and what it says?
Chair, I wanted to summarize what is it that we considered under OPEX for the prudency assessment. In terms of the OPEX prudence assessment, we assessed whether the decision to incur the cost is consistent with the good practice. And our assessment is that, yes, indeed, it is considered. However, the issue was with the fact that they had included an amount there which pertains to transportation costs, which we believe that it should not be there. And then the second assessment under the OPEX was to assess the reasonability of the cost. And we believe that the costs that are included are reasonable as per the application of VGN. And the third thing that we considered was assess whether due care or good judgment has been a practice. And we believe that it has been. There is a document, a Chairperson, that unfortunately it was not circulated on time, but there is a document that we have provided which talks to prudency and efficiency test for the 3 CNG applications.
Okay, no problem. Thank you very much. Okay, members, if you are then clarified, Mr. Mkhize, as well on the issue of the prudency, at this stage, the submission, or sorry, the discussion document is still going out for public comment, unless maybe you have specific input in terms of questions that you would like the team to include. Then the team can include those questions to be posed to stakeholders. Otherwise, once the full assessment is done, and with the benefit of stakeholders' inputs and comments, that the assessment will also form part of that final analysis for the final decision by the energy regulator. Are you happy, Mr. Mkhize, to proceed on that basis? Thank you very much. Members, I would like to take you to the recommendations. The recommendations are that the PGS is requested to note the discussion document for VGN's application for a maximum price of gas as contained in Annexure A attached to the submission. And the second decision is that the subcommittee is requested to approve the publication of the discussion document with confidential information withheld as shown in Annexure A to this submission. Members, by show of hands, if you are happy to approve and note. Thank you, Mr. Mkhize. Thank you, Mr. Gomede. Thank you, Mr. Bukula. Thank you, Advocate Stolle. Thank you, Ms. Mbongose. I also support. Members, we're going straight to item number 12, which follows after item number 8. Item number 12 is the discussion document on the preliminary assessment of the Sasol gases application for a transmission tariff. If you can introduce that submission, please, and take the matter as read.
Morning, Chair. Again, morning, members, colleagues. This submission is for noting and approval of the discussion document on the preliminary assessment of the Sasol gas transmission multi-year tariff application for the period 1 July 2023 to 30 June 2025. Chair, Table 1 provides an overview or summary of the application for this multi-year transmission tariff application, which breaks down the tariffs per zone, Zone 1, Zone 2, Zone 3. And in terms of the NASA analysis, Table 2 provides an overview of our calculation compared to what the information Sasol has provided, and the major differences are in terms of the work calculation and the taxation calculation for the financial year 2023, 2024, and 2024-2025. The major difference in the work, Chair, is based on the CPI forecast that was used in their calculation. So, but the differences are less than 2% in both financial years. And then, Chair, the recommendation are on page 32 of the application of the submission. Thank you, Chair.
Thank you very much. Ms. Makota, do you want to touch on the additions that caused the increase in the cost, as well as the issues around the SWM, Secunda, Wheatbank, Middlebank pipeline?
Chairperson, when we considered the application, the SWP pipeline tariff is usually higher than the other tariffs. And the main reason for this high tariff is because of the volumes that are very small for that particular zone. And in addition, the network for that zone is very old in such that they spend significant money maintaining it. And therefore, it causes those tariffs to be very high. And this has been a trend even with the previous tariff application. I think those are the highlights, Chair. Thank you.
Thank you very much, members. This one, that pipeline has issues. I think there were 3 incidents there that costed money in terms of the maintenance of that pipeline. So it is one which maybe members would like to look at whether there's an issue of the depreciation there, number 1. Number 2, the maintenance regime with regards to that pipeline. Perhaps it's one that when the letters for annual audits are done, they can also just mention this specific pipeline for it to be properly audited, because there's a lot of money that is spent there. But the other thing that can still be within our control there, members, is the volume projections, because we do know that volumes are limited. So the increase on the volumes are very, very unlikely. So it is something that we need to make sure that we scrutinize any assumptions that seek to increase the volumes by a significant amount. Otherwise, it will cause problems of a clawback. If members can also just take that into consideration. Having said that, members, I would like to open up the submission for comments and guidance. Mr. Bugula?
Thank you. Thank you, Chair. I just want to check on 5.53, the decommissioning costs. I know that we are limiting them to 6 years or 7 years, but I just need to be guided whether this is then the useful life of this pipeline. It's not going to happen that after the 6 or the 7 years, there would be the continuation of getting the decommissioning costs. Thank you, Chair.
Thank you, Mr. Bugula. Any other question from members? If none, Ms. Makota, may you please clarify the issue of the timing that is specified there, and the fact that maybe the pipeline will still be utilized beyond that period that is stated there, and whether we actually have any decommissioning plans that we have received to justify that timeline that has been put there.
Chair, in terms of the calculation of the decommissioning cost, we considered the useful life of the assets. I will ask Mr. Ngoveni to just take the members through the summary of that. But in terms of the plans of the decommissioning at this stage, we don't have any plans that has been submitted regarding the transmission pipelines. Melusi, if you can just summarize how we do the calculation in response to Mr. Bugula.
Noted, Chair, and thank you, ma'am. So the useful life of these assets, Chair, are indicated in Table 11, which shows that the period of the useful life of the assets per zone. And so what we are simply indicating in that section, Chair, is that yes, the assets will not be used beyond the useful life of 7 years, as indicated there in paragraph 5.5.3, Chair. But yeah, the summary of the useful life of those assets are indicated as per Table 11, and yeah, the correct interpretation has been given by Mr. Bugula on that paragraph, Chair. Thank you.
No, but what does it mean, these 7 years? What are you saying there? Because we do have the summary of the years for each of those pipelines. If they are well maintained, they can still be useful for the periods that are shown on the table. Now, when we mention 7 years, you mentioned 7 years in respect of, what does that mean?
So Chair, can I come in there? The 7 years is the remaining life. So that's it's purely the useful life subject the years that have been used to get to the remaining life of the pipeline. Thanks.
Okay, then the question by Mr. Bugula is whether then there will be no possibility of that pipeline to be utilized beyond that period. Assume that it is still performing in terms of performance, in terms of efficiency, in terms of it being utilized. So if we put that 7 years, does it mean that come that 7 years, it will not be useful, it will not be usable?
Yes, Chair, it might be full and usable. However, from a returns perspective, or from a tariff calculation perspective, a return will not be earned on the pipeline. Thanks. Okay.
All right. Okay. Mr. Bugula, does that then clarify in terms of the return on the pipeline? Perhaps it will just be issues of maintenance and all of that for operational expenses.
I am fine, Chair, if that's how we would do it. It's just that after 7 years, I probably would not expect that when we do a tariff for this, we would then be putting on additional decommissioning costs, because they would all be accounted for and they would be accumulating whatever interest that these funds, wherever they would be placed, would be accumulating.
Okay. All right, just keep that in mind, Tim, that input, so that you look at it carefully. All right, members, I would like to then take you to the recommendations. They're on paragraph. So just trying to get to the paragraph, but the subcommittee is requested to note the preliminary assessment of the Sasol gases application for a transmission pipeline for 3 zones. Zone 1 being Gauteng, Secunda to Gauteng region. Zone 2, Secunda, Middleburg, Witbank, as well as Secunda to KZN. And secondly, the subcommittee is requested to then approve the publication of Sasol gases application, the discussion document for public comment with confidential information withheld, as shown in Annex A. Members, are you happy then to approve? And also, if the team can carefully look into that period that is stipulated with regards to the rehabilitation of the decommissioning cost and the yes there. By show of hands, members. Thank you, Mr. Bukula. Thank you, Mr. Gumede. Thank you, Advocate Stole. Thank you, Ms. Mbungose. Thank you, Mr. Mkize. I also support. Thank you very much, members. Members, I'm going straight to item number 13. Item number 13 is an application by Sasol Gas for, it is called an amendment, and the team will give a very brief context to explain this so that there's no confusion. An application for approval of maximum gas price in terms of Section 211P of the Gas Act for the period July 2022 until 30 June 2023. Ms. Makota, may you please introduce the submission? Take it as read, but please provide the right context.
Thank you, Chairperson. This is the Sasol Gas application for the Sasol Gas amendment application for the approval of maximum price for the period of 1 July 2022 to 30 June 2023. Sasol Gas submits that it has been charging a maximum price of 68 Rand per gigajoule. According to Sasol Gas, the maximum price of 68 Rand was as a result of the engagements it had with NERSA to keep the maximum at this level in response to the surge in the international gas prices. Therefore, the maximum price was kept constant and no adjustment factors were implemented. Sasol Gas therefore submits that it has suffered financial loss during this period and requires to be compensated for the loss. Hence, it is now submitting this application for amendment. According to Sasol Gas, one of the exceptions to the common law rule of functus officio is that a final decision can be revoked with the consent of the person who benefited from the decision and whose rights will be affected by the revocation. And therefore, they believe that they are submitting this application on those bases. Chair, the summary of the maximum price calculation is provided on Table 2 of paragraph 6.17 of the discussion document. There you will note that Sasol Gas is applying for the weighted average maximum price of 120 Rand 32 cents per gigajoule and also a trading cost of 1 Rand 3 cents. They propose that this implemented in a phased approach. The cost of gas should be covered over 6 months and with the trading cost recovered immediately. Chair, in terms of the NERSA's assessment, we want to firstly indicate that although the application was submitted on the 29th of March, on the 31st of May and also on the 7th of June, we received correspondence from Sasol Gas asking NERSA to keep the application on hold since they are still consulting their senior counsel. And it is only on the 30th of June, that's when Sasol Gas asked NERSA about the status of this application, and it is for these reasons that we are now proceeding with the application. Now, Chair, we also want to explain why the maximum price was kept constant. The maximum price of 68 Rand was kept constant because of the fact that the decision that NERSA made on the 31st of March 2021 regarding this maximum price period, it was adversely affected by the upward pressure of prices occurring in the international markets. And it is on those markets that we used as competitive benchmark to determine the maximum price of gas. And therefore, the international benchmark prices used to determine the maximum price and the adjustment factor, they were no longer considered competitive because they were not increasing in alignment with the Sasol gas price, and also the demand and supply conditions that were affecting those countries had nothing to do with South Africa. And therefore, for those reasons, then engagements were held with Sasol Gas, and NERSA provided guidance to Sasol Gas that they may keep the maximum price of 68 Rand constant. However, they may also approach NERSA with an application to adjust the approved maximum price. Now, there are issues with regard to the jurisdiction of this particular application of Sasol Gas. I will ask the legal advisors to talk to those issues. However, in terms of the economic analysis of the application itself, there is NERSA's analysis of the Sasol Gas cost that is provided on Table 4 of the analysis of the discussion document, which shows the increase in the Sasol Gas cost from FY21 to FY23. And also our analysis of the trading cost is also provided there in the document. In terms of Section 3.2 of the methodology, any variance in the cost and therefore any Sasol Gas increase or its adjustment, it must be dealt with in the form of the clawback. And therefore, our recommendation is that Sasol Gas, instead of applying for the amendment of the maximum price, they should apply for the clawback. And this clawback should be based on the audited actual information at the end of the period. In addition to the cost increases that Sasol Gas wants to apply for, they've also included what they call the alternative value diversion. This is the same element that they've included in the maximum price for the FY24, and it accounts for the margin forgone by Sasol Gas by selling to external customers. I will ask Ms. Du Plessis to talk to the assessment of this one. Now, they also applied for the resellers' price. In terms of the methodology, the price for resellers are supposed to be included at a minimum discount of 5%. Sasol Gas does not believe that this discount should be prescribed by NERSA. However, their view is that the discount here should be based on the negotiation or commercial negotiation with the customers. Our view is that they should comply with the methodology and be able to provide that percent minimum discount to the customer. Chair, I will ask Ms. Du Plessis to provide the assessment on the alternative value diversion.
Thank you, Chairperson, if I may come in. Chairperson, the assessment on the alternative value dilution is exactly the same as what we had discussed under item number 5, which is that there isn't sufficient information provided in the application to engage with that issue in detail. Safe to note that the principles against which we would assess that alternative value dilution application is, number one, we need to understand the exact products that they can sell, where they can achieve the margins that they have indicated. Those products need to be in competitive markets, otherwise it will defeat the purpose of NERSA's approval of the maximum price, which needs to be a competitive price, and so it cannot be linked to markets where Sasol can achieve monopoly or excessive prices. Secondly, we would need sufficient information regarding how those margins were calculated so that we may interrogate it. And thirdly, we also need to understand whether it is a fair comparison to compare the margins that Sasol can achieve on an input product as opposed to the margins that it can achieve on a value-added end-user product or product that it sells to end users. Thank you, Chair.
Thank you very much. I thought, Ms. Makota, you were going to summarize. So, members, the issues here, in as much as the team has explained, what members need to take into account is the fact that this application that is before us pertains to a decision that was already taken by the energy regulator in March 2021. And the question is, can NERSA revisit its own decision? So that is the first question. But the second other thing that is very important that we should also ensure that the licensee is able to recover its revenue, and also in terms of the sales that were offered from July 2022 until 30 June 2023. So the fact of the matter is that the energy regulator has approved an adjustment factor on that 68 rands per gigajoule. So Sasol could not exercise that right that was in that decision for it to adjust the price of 68 rands. As a result, it has lost some revenue because it needed to adjust its price. So it couldn't do that from July of last year to date. So Sasol is now requesting the energy regulator to then provide guidance. Otherwise, Sasol could have easily just used that decision of the energy regulator to adjust its price. However, the adjustment factor would have caused a price increase of over 200%, simply because of the international markets. The price of gas surged, and Sasol simply said, we will not do this, we'll wait for guidance from the energy regulator. So up until now, then they had to come to the regulator so that the regulator can make a decision as to how Sasol and to what extent it can adjust its price. So it has not adjusted its price. So that's why it is coming to the energy regulator. So that's the second thing that we really need to take a decision on, that how the team should go about with this application. Then the third thing, members, is that on this very same decision that we're talking about, March of 2021, there's an association in the industry that took that decision to the High Court for a review, that the decision be set aside, the decision for a maximum price of 68 rands. So that the hearing on this was in June. Is it June or end of May? Somewhere there, I can't remember. So the judgment on that has not been delivered. So that is the third thing that the members need to take into consideration. So the last thing here, members, with regards to the discounts, members must be informed that there is no explicit provision of the Gas Act that says the energy regulator must regulate discounts or require licensees to offer discounts. That we don't have in the Act, but it is rather implied or inherent in the regulations that talk about the classes of customers, together with Section 22 of the Gas Act, which deals with price discrimination based on quantities of gas. So I just want to clarify that so that it is very clear in terms of how we exercise our legal mandate, especially where it is not explicit, so that we don't give ourselves powers that we don't have. So members, with those four, I would like members then to comment and provide some guidance. It was just a summary, just to locate this particular application that is before us. Any input? I'm going to also just start off with Mr. Bukula, your legacy hand. Unfortunately, Mr. Bukula has put you on the spotlight. I will start with you with that legacy hand that was there, and then come to Ms. Mbongose and then Mr. Mkhize.
Thank you, Chair. Although it was a hand that was not intended to be raised now, when I read this, I still get to the point that we have listed about 10 items that we needed SASOL to provide us with the information. I think starting from 5.8, the information that SASOL was supposed to provide us, and I don't see that information being provided by SASOL, including information around the three things that they are unhappy or that made them deviate from the methodology. I think they are listed, and I think one of them is weighted average. Yeah, they're listed on 5.4. The alternative value dilution compensation, the weighted average maximum price, and the substitution of the resellers adjustment of no less than 5%. In all of this information that has been required, SASOL doesn't seem to have provided that information, and I am fine with us publishing this, but on condition that when we come to be making the decision, SASOL would have provided this information so that we can make a decision that is aligned with the methodology and the mandate and powers that we have. I think on a lighter note, on 5.1.4, I think we can rephrase that. NESA's view is that NESA, I'm sure we can write it in a different language. Thank you, Chair. Those are my contributions.
Thank you, Mr. Bukula. Ms. Mbongose?
Thank you very much, Madam Maseti, and also to thank the team, Azwindini and the team. Chair, what I wanted to find out is, I could have misheard Ms. Makota when she was explaining the functus officio principle to say that we could revisit our own decision other than through a court application or a review application. But I think in your opening remarks, or now the explanation before you opened for questions, you did indicate that there has been a review application for which we still await the judgment. So what I'm concerned about is partly covered by Mr. Bukula, because I understand that there's been interactions between the NESA team and the SASOL team over a period of time. However, as is mentioned on 5.8, there are a lot of things that remain outstanding. And based on that, I wonder, is this amendment application not before us prematurely, seeing that all these things remain outstanding and they have not been addressed? So we are not in a position to even consider this amendment application without all the information that we require. And as it says also on clause 5.18, that the application is incomplete because it lacks all this information, the evidence of cost increases, audited financial information for the financial year 23, and all the financial data to supplement the application, So I do think that maybe it is before us prematurely. We're not even in a position to consider it when we take into account that there are a lot of information that still remains outstanding. Thank you. That's all from me.
Thank you, Ms. Mbongose. Mr. Mkhize?
Thanks, Chairperson, and thanks to the team for the presentation. I am in the same boat as my colleagues. I was wondering, as the presentation was made, as to whether is it really not premature for this to come before us, noting that SASOL has not provided the information that was requested. Looking at the completeness of the application, I also was expecting that maybe Lars will come in and just talk to the legal implications or issues related to this matter. That is all from my side. Thank you.
Thank you very much. Maybe Lars must come in here, and thank you, members, for pointing that out. But I think there's an issue between the team and Sasol here. Sasol insists that the committee or NERSA must consider its application in its current form. The team has made some requests, and Sasol feels that it has provided information and it stands by the information that it has submitted. On Friday last week, they sent another letter addressed to me stating that it is concerned that NERSA is not following its procedures when the information when the application is filed, that NERSA must follow its procedures, assess when it assesses, and take a decision that NERSA feels is an appropriate decision. Then they will take it from there. So that is the latest letter that we received from Sasol on Friday last week. Hence, this information is here. And that is also prior to, after Sasol has requested that NERSA at least withholds this application until it gets a legal opinion from its legal team. But now they came back and said NERSA is delaying it, and they're no longer touching on the fact that they asked that the application be held in abeyance until they get a legal opinion. But we responded to that. So the application is here, and Sasol feels that the way that it is, NERSA can take a decision on the information on the application as it stands. So on that is the issue here, and the team has been trying to engage with them. So hence the application is before us. But the other thing, members here, remember the decision that was taken in March 2021. It was taken using a different methodology. So the price of 68 rands as a maximum that they are charging today is in respect of a methodology that was used in 2020-2021. This year, in January 2023, a new methodology was approved. So they cannot, even if they were to do a clawback, they cannot utilize a new methodology to deal with a component of a decision that was taken using a different methodology. So there is that aspect as well, members. And the other aspect is also just on the form of the application before us. Do we have jurisdiction to amend an application? What are we amending here? What is Sasol requesting an amendment for? So can we amend that decision that was taken in March 2021, as this application indicates? And these are some of the things that the team pointed out to Sasol to say, you are requesting the energy regulator to amend an application, but there is no application before us. What is before us is a valid decision taken in March 2021, and NERSA cannot amend that decision unless maybe then there was a new set of information. Then you are applying for something new, but not to amend. So those are some of the things, maybe members, at a principal level that we need to just provide guidance to the team, and also maybe to include in the questions if the matter is going to be taken for public consultation, so that it's not a matter between NERSA and Sasol, but also the public can get an opportunity to respond to it. Mr. Mashiane.
Thank you, Chair, and good morning, members again. Chair, I think you have summed up the legal issue very well in your last submission now with regard to the issue about the amendment. Our view is that the application for an amendment is improper, because it seeks to amend the decision and not the application. As you have correctly pointed out, Chair, that there is no application before NERSA that is incomplete and that perhaps needed to be amended before a decision can be made. A decision has already been made, and Sasol is making an application for an amendment. They term it an amendment of an application, but it's actually an amendment of a decision of the energy regulator, which the energy regulator in our view as the legal team, is that it's functus, the energy regulator is functus officio, and therefore the perceived action that Sasol is willing to pursue with this application, it's improper and it's unlawful, because the NERSA cannot amend a decision that has already been made. It has become functus officio. And further, that Chair, in our engagement with Sasol, we when they raised the issue about, which was touched by Ms. Makota, the issue about that in common law, if the person who's going to benefit from a decision request that that decision should be rescinded, that on its own grants NERSA authority to can revisit the decision. We have pointed out to Sasol that we are a statutory body and we can only operate within the confines of the empowering legislation that grants us powers to do so. But therefore, in terms of the legislation that governs us, we do not have those powers to can do so. And further, that common law cannot trump statutory obligations or statutory provisions. I shall put it there, Chair. Thank you.
Thank you very much, Mr. Mashane. Mr. Mashane, can you touch on the issue that I mentioned about the High Court hearing of the same? Because if Sasol comes to us and say, change your decision, do something about your decision. Remember, the matter already has been heard. So if the High Court has already heard that very same decision that Sasol wants it to be changed in the High Court was requested to set aside that very same decision. So would it be proper for NERSA, for instance, to then, do anything with regards to the decision if the High Court has already heard the matter on that very same decision? And the High Court, in terms of our law, is the one that can set aside a decision. So you have that situation right now, even if we have not obtained the judgment on that matter. But would it be something that is proper, that the regulator do anything on this decision that the High Court has already heard?
Thank you, Chair, for bringing that one up. Yes, it won't be ideal and proper for NERSA to also deal on with this issue whilst we still awaiting a judgment from the High Court on a matter that addresses the same issue that Sasol is requesting NERSA to process and make another, so to say, another decision on it. And in our internal discussions, we were actually of the view that perhaps this, ideally, Sasol should have waited for the judgment to be made, and before they can decide on what action to take. And that would be perhaps an ideal process to follow, because the decision of the High Court will basically pave a proper way and provide guidance for both Sasol and NERSA in this regard. Thank you, Chair.
Okay, thank you very much. Ms. Mvuyana, do you have anything to add? But also keep in mind the fact that, yes, that decision of NERSA's decision is still valid, and Sasol is disadvantaged or prejudiced in the sense that it did not adjust the price simply because they did not know what the quantum is, because the quantum could have been highly excessive. Otherwise, the decision is still valid until set aside. Yes, we have not gotten the judgment. The only thing I was asking also is about whether now, if they asked anything to be done on the decision itself, but with regards to the component of the decision to adjust, and the fact that the price remained constant for a year now, that also is the problem that the regulator must take into consideration to ensure that the licensee does not commit a revenue suicide, and we need to then compensate the licensee for the efficiently and prudently incurred cost, and also for additional cost for that pertains to acquisition of gas in terms of the law. So we still have the duty to make sure that they do recover at their cost. So I just wanted to draw a distinction with regards to the request to change or do anything on the decision, but also with regards to their right to adjust the price. Ms. Mvuyan?
Thank you, Chairperson.
You are on mute, Ms. Mvuyan.
Thank you. Sorry about that, Chairperson. Thank you very much, and good morning, everyone. I was saying that I have nothing much to add, save to emphasize on the point that they seem to have brought this amendment application in terms of Section 21(1)(p). But when we look at Section 21(1)(p) of the Gas Act, our reading of it suggests that that talks about the first-time approval of maximum prices or of maximum prices for licenses. So there is nothing throughout the entire text of the Gas Act that seems to suggest that we are, or NERSA has got the powers to actually amend a decision that has already been taken in respect of applications for maximum prices. That is basically the principle that brought us to the view, or that actually led us to taking the view that in as much as the amendment of the decisions already taken for maximum prices is not provided for in the Gas Act, it means that ideally SASOL would have had to bring their to bring a review application before the High Court for us to review our 2021 decision that also incorporated the issue of maximum prices for FY 22-23. So in that regard, therefore, we also then said alternatively, SASOL, because there was already that pending review application by one of SASOL's customers, then alternatively SASOL should have awaited the outcome of that review or of that High Court review application, which both the Chairperson and Mr. Mashiane has already alluded to. And then perhaps lastly, as mentioned in their application, when SASOL is actually trying to motivate around the principle of functus officio, they seem to be relying mostly on the revocation of an application, but if you for the reason that the term revocation is actually neither the term revocation or the term amend or amendment are defined in the Gas Act. So therefore we therefore resort to the ordinary meaning of those words. So ordinarily the dictionary meanings of those words, to revoke actually connotes to annul something by recalling it or taking it back, whereas amending actually means making changes to something that has already been decided on in an effort to improve it. So by me making a mention of this distinction between revocation, which they are seeming to be advancing their argument on, whereas their application is talking about an amendment. The significance of me bringing up that issue is to say that they can actually not raise an argument or of that common law principle pertaining to the revocation, because in any event, it is not like they are saying they no longer want a maximum price application for FY 22-23 at all. What they want us to do instead is to say the 68 rand 39 cent that they've been applying it was not appropriate, and then they are seeking us to make a fresh determination that is most likely going to be above the 68 rand 39 cent that they are talking about. So that also brings into play the fact that we also do not see an element of an adverse effect of that decision. I mean, of that, we do not see an adverse, the principle of an adverse effect, or the effect of an of adversity in respect of that 68 rand 39 cent that was applicable, because in any event, what they are asking us to do will sort of have an effect of raising up the maximum price for FY23 that is being spoken about. Spoken about. Thank you.
All right, thank you very much, members. There's lots of clarification here. I would like to check if members are comfortable and or whether members would like to guide just before I go to the recommendations. Mr. Mkhize?
Yeah, I'm still a bit confused here. Is there a chance to approve or say not to say to lodge an application that is a new application, so to say, to wait for the processes to unfold, and then there's a lodgement of a new application, and we don't talk of an amendment as such. Just want to get that from the legal side.
Mr. Mashiane? Before you come in, Mr. Mashiane, let me take Advocate Stolle.
Chairperson, I was just trying to respond to your suggestion, and that you were asking is there any guidance that members would want to provide. I think from me, based on what has been written in the submission and the verbal presentations, it would seem that the matter is before us prematurely, as it has been said. However, even the publication of the discussion paper as well may be going out prematurely if we were to approve it, because some of the outstanding information that has been listed in the submission may inform us in terms of having to improve that particular discussion paper. So, Chairperson, I would that would be my position, to say that everything in relation to this application seems to have been brought to the committee prematurely. Thank you, Chair.
Thank you. What about if Mr. Stolle can guide on the issue of Sasol maintaining that it has brought the application in this form and that its application is adequate, and that NERSA must not deviate from its processes, from its regulatory processes that it follows when an application has been filed with NERSA, that NERSA has a clear procedure on how to deal with that application, and that this time around with Sasol, NERSA is not following its procedure of considering that application, and Sasol insists that NERSA must follow its processes and not deviate from its processes, and put the application also out there for public comment. As I indicated, that the team has tried to engage, and I think also LAS was part of those engagements. So it's been quite long, and we're getting letters from Sasol indicating that NERSA seems to be not consistent, and that NERSA is not willing to consider its application. So if the point that you made can also be reconciled with that view from Sasol. Thank you.
Okay, Chair. I think, Chairperson, thanks for that. For me, I do not believe that NERSA is deviating from its processes. And the reason being that, how are we expected to take out this application to the public when there is still outstanding information that they need to give us? Unless if we are saying the listed information that is indicated as being outstanding from Sasol, we are not going to be pursuing it
in terms of requesting Sasol to submit it. So for me, Chair, we're not deviating from our processes. However, we can't go out there with the discussion document when there's still information outstanding from the applicant. Thanks, Chair.
Thank you very much. Mr. Mashiane.
Chair, with due respect, can I have clarity on the question that's raised by Mr. Mkhize? I may have missed it somehow.
Mr. Mkhize has asked whether there's maybe there's three things. Mr. Mkhize is trying to deal with an important issue of our own decision that allowed or gave Sasol the right to adjust its price because it was a multi-year price decision. So by 1st of July 2022, Sasol ought to have adjusted its price without coming to the regulator. But because of the economic information and economic data that changed so significantly, Sasol couldn't adjust it automatically because the quantum could have been huge because of what happened in 2021, late 2021 and early 2022. So Sasol decided rather to then get some guidance from the energy regulator. Now, the energy regulator must guide so that the licensee can be in a position to recover what is due to the licensee. And only NERSA can provide that guidance, the regulator. So the regulator must at least exercise its powers now to guide on that quantum for the adjustment. Now, Mr. Mkhize is asking, apart from the fact that the form, because here we're worried about the form of this application, which says amend an application, we don't have jurisdiction on that. That's what the explanation is. Now, Mr. Mkhize is saying, in the alternative, is it possible for this licensee to bring a fresh application now for purposes of that adjustment that it could not exercise, of which it was part of the decision of NERSA, of which decision is still valid to date because it has not been set aside by the court. So Mr. Mkhize is asking if it will be legally sound to come with a new application, that new application based on new set of facts, so that we make sure that the licensee then recovers its cost. That's Mr. Mkhize, you can indicate if I summarized it and simplified it in a manner that the team can understand. That's the question, Mr. Mashiane.
Thank you, Chair. I think in with regard to this matter, it's actually based on what the methodology and the decision that was taken by the energy regulator has actually provided for, which allowed Sasol, based on the circumstances that Chair has briefly touched on, to allow them to bring in an application for an adjustment for the FY 22-23. Pending the application, the review application that is before the High Court. And I do not think, in my view, that Sasol could be prevented from bringing that application if that application is in line with the decision of the energy regulator and that which decision was actually allowed Sasol to can bring in that fresh application depending on the economic circumstances, Chair. I shall leave it at that, Chair. I don't know if I have clarified it. Thank you.
I think you did. All right. All right, members, with your guidance now, I don't know, I would like to then go to, because we have the application in its form, the way it is. The team analyzed it. The issue of also the additional information, I think also Mr. Bukula touched on this. Since this application is going out there for public comment, because stakeholders would be affected either way by the final decision. So it's important that we also comply with Section 10. This is not a final decision. At this stage, we're not taking a final decision, but we are taking the application and pointing out issues in the application and asking questions to stakeholders. Would members be amenable then that this application be published as is, also given the interactions with Sasol Gas and what Sasol Gas has put in writing twice with regards to the manner in which this application is dealt with by NERSA. So with that, members, if you agree that it be taken for public consultation so that we can hear stakeholders, the committee then is the attention of the committee is brought to paragraph 13 on the recommendations that the subcommittee is requested to note the discussion document on Sasol Gas's amendment application for the approval of a maximum gas price for the period July 2022 until 30 June 2023 as attached on Annexure A, and then approve the publication of this discussion document for public comment and with information that is confidential being withheld as shown in Annexure A. Members, are you happy to take that decision? Mr. Pukula?
Chair, I would propose that, I mean, there's still this additional information. I would propose that we take the decision, but also encourage Sasol to provide us with this information that we would then also add in what is going to be used as the consultation in for the sake of progress and ensuring that we don't go to court unnecessarily if Sasol provides the information and if members of the public can have a view or can present their facts, evidence and opinions on the information provided. Thank you, Chair.
Thank you very much, Mr. Pukula. So we will also add that the committee approves that Sasol provides this additional information to enable the members of the public to comment on that information before the close of the public comment period. Mr. Mkhize, are you also supporting the Mr. Mkhize?
Chair, I just want, I think it will assist if the legal people can say, you know, very clearly and categorically that the information, the application as it stands is complete or adequate. Because if it's not adequate, how can it then be entertained based on the information that is required vis-a-vis what has been availed? So that even if we take it to the public, you must have a complete information for the public to engage on. Else, once we take there, when it comes back, we should just process it on the basis that if you don't provide information to justify something, then there's no reason to justify it. In essence, that's then what it would say. But I would like just a clear comment around the completeness of this application. Thank you.
Ms. Makod, can you please clarify, because the nature of the information that that is there on 5.8, look at it carefully, because this information is information that seeks to justify what Sasol has requested. All of the additional things that were not in this methodology that are also not in the previous methodology. Can you clarify that the nature of the information here, so that, because it's the one that indicates whether information is adequate or not in terms of your own processes when you look at the adequacy of information during screening?
Chair, not seeking to be disorderly, just to chip in now. I just want that clarification, because if it's information that is required for one to justify, but the application does meet the minimum requirements, it's still information that then means that in essence one, subject to the views from last is one that would process and say you did not provide me the justification to give you what you have applied for. That's what actually in essence it does, where the minimum information is met, but justification is inadequate. That's how I look at it. But let me get clear, because I want this issue to be clarified in terms of the adequacy of this application. Thank you.
All right. Thank you. Last and then Samuel. But members also, please don't forget the fact that the nature of the application that is before us, the form, do we have jurisdiction on amendment of application? So don't forget that that is what Sasol has also requested. So we also need to take that into consideration, because we might not have jurisdiction on what is asked from us in terms of the application itself being an amendment of an application. Last, please.
Thank you, Chair. Chair, I believe that if the application does meet the minimum requirements for it to be considered, it can be processed, and the processing thereof does not necessarily mean that the decision will be granted in favor of the applicant, being Sasol in this instance, but it's purely on the procedural aspect of having to consider and process that application. And if the committee is of the view that the application is incomplete and it may not be processed in its current form, while Sasol is adamant that they have complied with all the necessary requirements to make the application to be proper before the committee, and the committee is of the view that the application still misses some information that is critical for the committee to make a proper decision. I think that it can be processed if it meets the necessary minimum requirements in terms of our procedures. Thank you, Chair.
Thank you, Ms. Makot.
Thank you, Chairperson. The advice that we received from our legal advisors was that the application in its current form does not meet the legal test. As such, NERSA will not have jurisdiction to assess it. So the issue with this application is the jurisdiction. Now, in our assessment, we assessed it and we informed Sasol Gas to say the approach that you have taken, it does not meet the legal requirement. For it to meet the legal requirement, you need to change your approach and submit it in the form of a clawback. And for it to be complete in the form of a complete a clawback, this is the list of information that we require. Thank you, Chair.
Also clarified, so the information that you have listed there is information that in the event that an appropriate application is before us, this kind of information is information that you say will be required, or what is it? So if you can clarify that last point that you've just made. Mr. Pukula?
Chair, I'm a bit taken aback by Ms. Makota's statement, but if the legal advice was that it should not be brought here, and it should not be one that we are going to look at as or allowed to be sent out for consultation, then we should not be considering it.
Please clarify so that we don't take the committee's time. We need to wrap up on this matter. And the legal people must, because you've been part of this from the beginning, and we've had interactions with yourself for advice. And after that, because I could not engage on the content of this with the applicant, you were the ones that engaged with the applicant on these matters. And also with the fact that the decision also on this, given the challenges that are raised by the applicant, challenging your approach, it is important that the decision is taken by the committee that has powers to take decisions on these matters, not by individuals. Even myself, I don't have powers to take decisions on behalf of NERSA. So it can only be this committee that it then can have a decision on this matter, particularly if you already have an applicant that is challenging the process. So I think we need to correct that aspect, Azwindini, because you have already put to Sasol the issues with the application, the form of the application first of all, and then also the components that are included in the application. Hence, then you decided to follow the methodology that says that if then there is no compliance with the methodology, then the energy regulator may take a decision that the applicant amend its application in line with what NERSA would have indicated. So it can only be the committee that takes that decision. If the committee feels that once the application is, the final decision is taken, that the applicant under these circumstances will qualify for a clawback or no clawback, but that's not the decision that an individual can take. So I just want to correct that aspect.
Yes, thank you, Chairperson. Chair, I also want to add the fact that we are aware, or we have been advised that the issue with this application is the approach, in that it does not meet the legal test. NERSA may not have jurisdiction to consider it. However, because there is public interest out there relating to this application, and that customers already have been informed by the applicant that they must expect this type of application, and because of the letters that we've been receiving from Sasol Gas, we were then advised to say take it to the PGS so that there can then be a public consultation process. That is the main reason we are bringing it here, Chair. So the list of information that we have listed, we are simply saying for Sasol Gas application to be compliant, this is the approach and the information that we require.
Okay, members, I would like to guide as follows. I think the application is properly before the committee. There is no doubt about that, members. So with regards to the alternatives, we cannot at this point perhaps indicate what form, except to indicate that obviously there is a valid decision of the energy regulator which has not been set aside by the court at this stage. That's number one. So in terms of summary, so that is number one. The second thing is that in that valid decision of the regulator, as we still recognize it to be a valid decision, it included an adjustment factor. It allowed Sasol to adjust its price. Sasol could not exercise that right to adjust its price. And now it is coming to the regulator to say, regulator, we had to wait for you to indicate the quantum of adjustment since the economic data could not or yielded perverse outcomes. So we would like you to then indicate to us the extent to which we can adjust our price, because we've made losses and we could not recover the revenue that we needed. And also our regulations and regulation 4 requires NERSA to allow the licensee to recover prudently incurred and efficiently incurred cost and the total investments, the return on total investments. And that is the regulation that the Constitutional Court emphasized in terms of the task of regulating. So Sasol is bringing this also in respect of that regulation read with section 21(1)(p). So that is that aspect of us now in the task of how do we make sure that the loss that they've incurred, given the fact that they couldn't adjust the price, how can it be dealt with appropriately? Now, with the way that they framed the request, it is not within our mandate because they want us to amend an application and there is no application before us. What stands is that valid decision of which we cannot amend that valid decision. So the appropriateness of the form of the application before us is the issue. So then the team considered whether or not then something like this can be looked into by way of a clawback, but also given the fact that they had that right to adjust. So how else to deal with this? But then it's not a decision when you reject that application, because it's not a rejection of the incompleteness of the application as staff would normally do. It's not just that incompleteness, but it is the scheme of the application to deal with that decision. Hence, it must come to the committee. So in this instance, before the committee takes a final decision on the matter, in any event, it will be the energy regulator that takes a final decision on the matter when the committee recommends. So the committee now is requested that it puts the matter for public comment and indicate all of the shortcomings that are in this application, and hear what Sasol is going to say in the public comment, what the other stakeholders are going to say. Then the energy regulator will be in a better position to take a decision, recommend to the energy regulator. With that, members, are you in agreement that perhaps this should be the way forward here, and the reason why this application is here? It is for that reason, members. Hence, then I would like to take members to the recommendations for us to take a decision for public comment, so that if then the energy regulator later on gets the information in support or changing things or rejecting, that will be informed by the input received from during the public consultation process. Are members happy with that, so that then I can read out the recommendations, members, and close on the matter? Thank you, Mr. Pugula. Are other members happy as well with this summary and the processing of the application? All right, members, by show of hands, if you are in support of the decision, and the decision is that the subcommittee is requested to note the discussion document on the application for a maximum gas price by Sasol Gas for the period 1st July 2022 until June 2023, that the subcommittee approves the discussion document for public comment with information that is confidential being withheld. Mr. Zwane, please, ehlisa isandla sakho. Manget, you're not a member. Thank you, Mr. Pugula. Thank you, Advocate Sitole. You can't speak, Manget. Thank you, Mr. Pugula. Thank you, Advocate Sitole. Thank you, Mr. Kumete. Thank you, Ms. Mpungose. Ms. Nkwabe. Thank you, Mr. Mkize, and I also support. Thank you very much, members. I know that it was not a straightforward matter, but I thank you for your guidance and also for the robust discussions on this matter. Members, this now takes us to the consideration of the governance matters. At this point in time, I would like to thank the members of the public that were following our proceedings today and showing interest on these matters. We are going to stop the live streaming at this point so that we consider governance matters. Thank you very much.
Thank you, Chairperson.